So Kenvue stock has been crashing since the administration was attacking the company for the safety regarding Tylenol. Now, Kenvue's interim CEO is defending Tylenol and saying that the company is backed by science. So I'm going to go over the details of Kenvue's latest response, what it can mean for investors, and if the stock is a buying opportunity on this dip.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Kenvue's interim CEO is defending Tylenol's safety after President Donald Trump and Health Secretary Robert Kennedy Jr. linked the pain reliever to autism and crashed the company's shares. In a memo shared with around 20,000 employees, Kenvue's CEO and director Kirk Perry stressed that many credible public health and medical professionals maintain that Tylenol is safe for women to take during pregnancy. So it remains to be seen the ultimate consumer impact regarding Tylenol. But even beyond the attacks against one of the company's most popular products, Kenvue has faced a difficult quarter. In their most recently completed quarter, their top-line results were well below expectations, with organic sales declining 4.2%. Global consumption increased, but organic sales declined, and that's probably a result of lower price per unit or a mix of sales into lower price points. The results in self-care were disproportionately impacted by unfavorable seasonal and customer inventory dynamics, which masked strong market share performance for the business. The company noting that in the US, 83% of their businesses held or gained market share. And that's not what I'm hearing from other businesses. What I'm hearing from other companies, including Walmart, Amazon, Costco, Target, Procter & Gamble, Colgate-Palmolive, Clorox, all of these consumer staple businesses that make sales on essentials, products that people buy repeatedly, high-frequency products. What they're reporting is that consumers are trading down. Consumers are trading for non-branded products, store brand products, which come at lower prices compared to these branded products by these companies that I mentioned earlier. And so that's a result of a consumer that's seen inflation soar over the previous 5 years, while their incomes have not kept pace for the lower income consumer cohort. Higher income consumers are doing relatively well compared to lower income consumers, and the impacts of tariffs are disproportionately hitting lower income consumers. So their budgets are stressed, and so they're making difficult choices in what to buy with their limited budgets. They're paying more for things like rent, mortgages, insurance, transportation. All of these costs have increased over the previous 5 years, and so their budgets are extremely stressed. They're making these difficult choices, these difficult trade downs, and non-branded products offer an easy trade down for consumers during the time when they're uncertain about their prospects and they're looking to save money wherever they can. So, all that being said, the intrinsic value per share I calculated for Kenvue is significantly higher than the current market price of $15.81. It's trading near its 52-week low, and the intrinsic value per share I calculated at $28 is well above the current market price. Now, it remains to be seen the negative publicity from the current administration stating that it's not safe for pregnant women to use during pregnancy, how that will impact the company's sales and profits and cash flow. I think this is an opportunity for long-term investors to buy a stock that's beaten down, that's facing a lot of negative headlines in a macroeconomic environment that's not favorable for this company or others in this industry. So you're getting it at the low point. Of course, it is a risk that you're getting a value trap in this situation where the company's heading downward and you're catching a falling knife. But I think the risk versus reward is worthwhile for investors looking for a business in this category.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.